As we've seen all summer, livestock producers have not only been battling high corn prices, but also the lack of other forages on the market. We asked Otte if Wednesday's report, perhaps more bearish on the corn side, could be any relief for cattle and hog producers.
Corn futures retreated a little bit at the open this morning after USDA's crop report, production report, and the World Ag Supply domestic estimates came out. That does suggest relief. However, that's relative to expectations of what average traders expected the report to show. And there's a substantial contingent of analysts out there, including ourselves, that are of the persuasion that the corn market has not yet gone high enough to ration the supply with the demand that's out there for the 2012 crop. So that's a long way to answer your question, which is no, we don't think that this morning's reports provided relief for livestock producers.
So you still think there's a window then to buy corn before maybe the end of harvest where it gets tight again?
Harvest from a basis standpoint is always a good time to buy cash corn if you have some place to stash the stuff. Sure. And with a short crop this year, there's probably a pretty good chance producers who have on-farm storage will not be able, livestock producers that is, to fill it with their own crop. So this is a buying opportunity quite likely from a basis standpoint.
Let's look at supply numbers. We know that supply last year got hit with the Texas drought. Now it's getting hit with the Midwest drought. Are you concerned about the numbers that we're going to see going into 2013 in terms of how many cattle are actually going to be there?
The U.S. beef herd, the U.S. cattle herd has been shrinking since 1976 when it peaked out at about 136 million head. We're on a decline. We're on a steady decline in cattle numbers. We're on a steady decline in beef production. We're on a steady decline in per capita consumption. People say, why are we on all these declines? And the answer is, given the cost of production in the beef industry these days, cattle producers and other folks in the beef supply chain are not getting prices high enough to balance this, to cover their cost. And so in this morning's reports, I believe USDA pegs this year's beef supply down about 1.6%, next year's beef supply down about 1.9%. And so going forward, yes, beef supplies will tighten.
No turnaround in the near future then?
Well, we had big placements in March and April of this year, and that's going to equate into rising immediate term supplies. And we have to be cautious about how we're looking at this from the long term and the short term because of those points you mentioned, Jeff, about liquidations last year. It has distorted the normal flow of cattle into feedlots. But longer term, we're looking at tighter supplies and higher prices. And the name of the game in the beef business, the hog business, and to a certain extent the poultry business, and certainly the dairy business, is to maintain liquidity and maintain cash flow, because there are better times ahead, assuming that we get lower priced feed from the 2013 crop. And so we have to make the cash flow work to get there, and we will have a very significant clue as to what 2013 crop feed prices will look like early July of next year. As we observed this year, the week of the 4th of July is often a turning point in grain markets for the weather reasons.
Sure. Pork and beef going into next year, what do you see there? Pork will arguably be more of a supply there. Do you see consumption going along with it, or is there going to be that battle again with trying to get it?
Pork supplies this year are going to be up a little bit. Pork supplies next year are projected to be down a little bit. That's driven by these higher feed prices. As of this week, we saw front month fed cattle at a 6-month high, and we saw front month lean hogs at a 2-year low. That's widening the spread between beef and pork, and making pork more price competitive. And that becomes an issue for the cattle producer from the standpoint that spread's not going to get too wide, or consumers are going to shift away beef dollars that would normally go to beef over to pork.
So fed cattle prices going into 2013 remain somewhat untethered?
USDA is projecting the U.S. average price for fed cattle for steers for next year a little higher than this year. And that's predominantly going to be driven off of tighter supplies.
Give me your thoughts on the export market, opportunities to grow there?
There's
USDA says about even, I believe.
Right, but there's been more chatter about Japan easing restrictions and taking cattle up to 30 months of age, and we've been hearing that off and on ever since 2003 when we first had the first BSE scare. And to the extent that that develops, we have increasing beef export opportunities. But as we have learned in the past, sometimes on those types of things we wait to see them. Now we also have when prices are rising, importing countries seem to find fewer political reasons to block imports, and when prices are cheaper, then they find more reasons politically why they don't want to import more beef and pork. And prices, both pork and beef, are going to stay pretty pricey for quite a while. Then another thing driving all of that is world population is growing, and consumers in Asia, particularly Asia, are becoming more affluent.